R. Mukundan, who's Managing Director and CEO Tata Chemicals, to talk about their earnings and how things have shaped up for the quarter. Mr. Mukundan, it's great to have you on the show. Thanks very much for taking out the time. We really appreciate this interaction. Take us through your key highlights for Q4, volume growth and price trend for the soda ash business particularly.
So I think in terms of the key highlights, it's been fairly strategic issues as far as the company is concerned. We have moved forward on our strategy by concluding in this quarter the sale of fertilizer urea business to Yara. We've also concluded the business transfer agreement with Indorama for the phosphatic fertilizer, which we are hoping to conclude soon. So in terms of execution of the strategy which was outlined, I think this quarter marks a specific and actionable turn in terms of reaching certain destination, and that is also reflected in the one-off income of 888 crores which we earned through sale of post-tax number which we earned through sale of the urea unit. In terms of the sale of the phosphatic unit, the deal should conclude shortly, and that we announced is for 325 odd crores, and that is expected to move forward in a couple of fortnights or certain at least a month or two. So that's the key highlight. In terms of the business itself, I think this has been a quarter of strong market performance and strong market demand. While there were certain fears in terms of the energy cost in at least the industrial bulk chemical business, because of the market demand and tight market conditions, we were able to overcome the same and perform to the target. As far as the consumer business is concerned, the traction on the consumer business is extremely positive, and that business continues to grow. In terms of the Sampann brand, we've had 2 new products launched during the quarter, which is Khichdi as well as the Chilla Mix, and there's a whole range of value-added pulses products which we are now launching in the market every quarter as we move forward.
Capacity utilization of chemical segment margins and what margins you've seen over FY19?
In terms of in terms of capacity utilization, I think we are running flat out all our factories, all our plants. Really, our utilization is pretty close to 100% as we speak. As I said, the demand has been fairly strong, and that has led to a good pick from the plants. In terms of margin and pricing structures, again the market is favorable on our side, and we expect that to continue at least for a while.
Right. With more soda ash supplies coming from Turkey this year, how much will it affect the chemical commodity price over the rest of the year and consequent impact on margins, you think?
We actually don't see the kind of a major impact because the overall import scenario to India remains more or less steady, with certain players coming in, certain players exiting. So it's a combination we need to watch out for. Overall demand supply situation, as I said, has been either balanced or tight, and that continues to be the case at least for few more quarters going forward.
So what about performance of consumer segment and product launch plans?
Not really capex, it's mostly opex as we speak. I think when we launched these new products, mainly in including organic pulses in addition to the Khichdi and Chilla Mix, we launched them mainly in Amazon and Star Bazaar. We have to increase the penetration to other stores, which we will be doing in the coming quarters. So really it's going to be a market expansion story rather than a product. There are a few more product variants which are going to come in the Pulse platform, but they will continue to get launched as they come in the market. But really the story is of expansion of the market reach rather than a greater range.
Important for the market to assess then what your capex plans are at this point in time over the next 2 to 3 years.
No, capex overall, I think our plan is about our sustenance capex for existing industrial chemical business about 500 odd crores. There is certainly capex being planned for salt, which is we are continuing to expand salt every year on year, and we do expect that that capex to continue at a growth capex to continue. In addition to that, there is also growth capex for the new businesses, the nutraceutical and HDS. Overall put together, we expect the capex for the current year close to about 800 odd crores.
So, plan to enhance shareholder return growth roadmaps. What are these for next couple of years?
In terms of growth, our key growth drivers are going to be specialty business, which is basically the agrochem through Rallis, and the nutraceuticals and HDS silica business, which we are in the process of acquiring, and the consumer business. And we do see the market very, very favorable for these businesses, and the capital spends also will be towards these businesses. In terms of inorganic chemical, I think the market conditions are favorable, and we will mainly focus on debottlenecking our current site, which is Mithapur, and the US site in Wyoming.
Right. You know, revenue and profits are something that the markets always seek guidance on. As we close out FY18, what can you indicate to the market on the growth trajectory for this financial year, the financial year we are in FY19?
So, in terms of margin structure, what we ended the year was about 20 odd %. I think this is slightly higher than our normal expectation of 16 to 18. So, we do expect that this margin structure will continue going forward broadly.
Okay. Any reorganization or restructuring of the business which you're looking at?
Certainly, I think in terms of consumer business, we are looking to work closely with our companies which are consumer facing, especially if you look at our partnership with Star Bazaar, that has played out very well for us, and we will continue to explore opportunities by which all the participants from within the group can benefit by working closely together.
Mr. Mukundan, thanks very much for joining us and giving us those details on your earnings. We wish you the very best.